Welcome back. Today the questions of the internal controls section E will be presented. This section will be shown in 3 episodes. Follow the channel to receive all the questions and follow the presentation of new questions related to the 2023 exams, the Institute's questions, retired. Please subscribe to the channel, and if you like the content, like the video in support for us to continue to display everything related to the CMA certificate. Let's get started. Question 1. Which Board of Directors committee is charged with overseeing the financial reporting process? A. The Audit Committee. B. The Compensation Committee. C. The Financial Committee. D. The Governance Committee. The answer is A. The Audit Committee. The Audit Committee is charged with overseeing the financial reporting process. Question 2. Which of the following is true regarding the Board of Directors? A. The Board of Directors must act in the best interest of management. B. The Board of Directors must establish an audit committee to oversee all internal controls. C. The Board of Directors must act in the best interest of the employees. D. The Board of Directors must act in the best interest of the shareholders. The answer is D. The Board of Directors must act in the best interest of the shareholders. The Board of Directors' primary responsibility is to act in the best interest of the shareholders. It is not required to establish an audit committee. Question 3. Because of the global nature of business, auditing and issuing audit statements can become very complex. What is the most accurate statement about how financial reports should be prepared? A. Every organization's financial statements must be prepared in accordance with U.S. GAAP because the United States is the largest economy in the world. B. Because IFRS is used by the majority of nation-states, the financial statements should be prepared under IFRS for auditing purposes. C. Due to the numerous requirements and disclosures necessary for each specific industry, there is no standard for audited financial information. D. An organization may prepare and present the information related to financial statement disclosures under the accounting framework that is most appropriate for the organization's industry and market. The answer is D. An organization may prepare and present the information related to financial statement disclosures under the accounting framework that is most appropriate for the organization's industry and market. Different reporting frameworks may very well be appropriate for different organizations and industries. Question 4. The Sarbanes-Oxley Act disallows each of the following services for auditors of a publicly traded company except for A. Human Resource Services. B. Financial Information Systems Design. C. Tax Preparation Services. D. Actuarial Services. The answer is C. Tax Preparation Services. This is correct. Tax preparation services are not prohibited under the services that the Sarbanes-Oxley Act disallows to be provided to an audit client. Question 5. The Sarbanes-Oxley Act of 2002 increased management's responsibility for accurate financial reporting. Which of the following is not a requirement of Section 404 of the Sarbanes-Oxley Act? A. Document management's assessment of the effectiveness of the internal control structure and procedures. B. Document management's responsibility for establishing adequate internal control policies. C. Document management's responsibility to refuse to accept contracts or business through the payment of bribes. D. Document management's responsibility for maintaining adequate internal control policies. The answer is C. Document management's responsibility to refuse to accept contracts or business through the payment of bribes. The 1977 Foreign Corrupt Practices Act forbids companies from accepting contracts or business through the payment of bribes to foreign governments. The other answers are all requirements of SOX Section 404. Question 6. Which of the following are responsibilities of the Audit Committee? 1. Aid in the choice of accounting methods and policies. 2. Document internal control procedures. 3. Sign quarterly and annual financial reports. 4. Choose the auditor and approve auditor compensation. 5. Review the auditor's suggestions for improved internal control. A. 1, 3, 4, and 5 only. B. 1, 2, 3, 4, and 5. C. Point 1, 2, and 3 only. D. 1, 4, and 5 only. The answer is D. 1, 4, and 5 only. The audit committee performs the following tasks. Reviews the company's internal control structure. Aids in the choice of accounting methods and policies. Reviews quarterly reports. Chooses the auditor and approves auditor compensation. Reviews the audit plan. Reviews the auditor's suggestions for improved internal control. Reviews the audit report and the audited annual report. Question 7. What is the most comprehensive explanation of the connection between internal audit and corporate governance? A. Internal audit should have the primary responsibility for communicating with external stakeholders, and corporate governance should have the secondary responsibility because quantitative data drives most decisions. B. Corporate governance is primarily focused on qualitative information and communicating this data, while internal audit is primarily focused on quantitative information. Therefore, internal audit should not be involved in any capacity. C. With the advent of data analytics and artificial intelligence tools, corporate governance is becoming increasingly less relevant than internal audit because data analytics and artificial intelligence tools are now the majority of decision-making tools used by organizations. D. Internal audit and corporate governance should work together to ensure that data integrity is maintained throughout the communication and strategy formulation process, especially in an environment influenced by data in a variety of ways. The answer is D. 1, 4, and 5 only. The audit committee performs the following tasks. Reviews the company's internal control structure. Aids in the choice of accounting methods and policies. Reviews quarterly reports. Chooses the auditor and approves auditor compensation. Reviews the audit plan. Reviews the auditor's suggestions for improved internal control. Reviews the audit report and the audited annual report. Question 8. The CEO of American Foods has made a variety of significant investments that have changed the firm's focus and diminished share value. One of American Foods' shareholders has aggressively been acquiring shares and now owns 10% of the company. The shareholder has nominated Eric Sorensen to the board of directors in an attempt to oversee manager actions. Although Sorensen could ask for the manager's resignation, he prefers that the manager make choices that enhance firm value. This type of motivation is known as A. Performance shares. B. Executive stock options. C. Direct intervention. D. The threat of firing. The answer is D. The threat of firing. This is correct. Sorensen can fire the manager. If shareholders are unsatisfied with the results, they can replace board members and have an influence on who holds manager positions. Question 9. How is the concept of corporate governance linked to internal controls and the method by which management implements certain control and other operational decisions? A. Corporate governance is an idea and concept that is purely assigned to senior leadership and the board of directors, so it is not connected to internal control activities in a significant way. B. Corporate governance only pertains to qualitative information, therefore, corporate governance is only linked to the internal controls over qualitative controls, not quantitative. C. The relationship between corporate governance and internal controls goes back and forth between establishing a tone and method of communication and developing tools to facilitate this communication. D. With the increased globalization of business, corporate governance measures and issues are not as important as they were previously, therefore, corporate governance and internal controls are no longer linked like they once were. The answer is C. The relationship between corporate governance and internal controls goes back and forth between establishing a tone and method of communication and developing tools to facilitate this communication. Although corporate governance is traditionally focused on strategy, the implications of governance will influence internal control decisions. Question 10. Which of the following correctly describes the Sarbanes-Oxley Act requirements with respect to auditor rotation? A. The audit firm must rotate the lead audit partner every 5 years. B. The company being audited must rotate the audit firm every 5 years. C. The audit firm must rotate the audit staff every 5 years. D. The company being audited must rotate the audit committee every 5 years. The answer is A. The audit firm must rotate the lead audit partner every 5 years. This is correct. This requirement is described in Section 201 of the Sarbanes-Oxley Act. Question 11. The Sarbanes-Oxley Act has multiple sections that outline management's responsibility regarding A. Required education for chief financial officers. B. Internal controls and external reporting. C. Long-term strategic planning. D. The purchase of securities. The answer is B. Internal controls and external reporting. This answer is incorrect. The Sarbanes-Oxley Act does not have multiple sections that outline management's responsibility regarding required education for chief financial officers. Question 12. Under the Sarbanes-Oxley Act of 2002, companies are now required to implement anti-fraud programs and controls that they evaluate on an annual basis as part of their integrated audit. A common component of such anti-fraud programs and controls is the effective design and implementation of codes of ethics and conduct. Which one of the following is not a characteristic of the operating effectiveness of a code of conduct? A. The existence of a plan to communicate the code of conduct to all, or covered, employees of the company. B. Audit committee involvement and oversight of non-compliance with the company's code of conduct. C. Lack of employee training in the company's code of conduct upon hiring and periodically thereafter. D. The existence of an appropriate hotline or whistleblowing line to report any violations with the company's code of conduct. The answer is C. Lack of employee training in the company's code of conduct upon hiring and periodically thereafter. Lack of employee training in the company's code of conduct upon hiring and periodically thereafter is not a characteristic of operating effectiveness of a code of conduct. Question 13. Which of the following statements is most accurate for describing the involvement of internal audit in the governance process? A. Corporate governance is the responsibility of management, and specifically of senior leadership, so internal audit does not really participate in this process. B. Since governance is related to corporate strategy and other qualitative measures, internal audit controls, policies, and other safeguarding data are indirectly linked to governance. C. The only way that internal audit should be involved in the corporate governance process is to advise management on external audit risks to ensure an unqualified opinion. D. Internal audit is only responsible for controls over the financial reporting process, so its involvement in the governance process should be focused on that process. The answer is B. Since governance is related to corporate strategy and other qualitative measures, internal audit controls, policies, and other safeguarding data are indirectly linked to governance. Although governance is linked to the strategic planning process, it is also connected to how the organization operates and manages business practices, which falls under internal audit. Question 14. Which of the following are provisions of the Sarbanes-Oxley Act? I. The board of directors of an issuer must appoint an audit committee. 2. Management must certify financial statements. 3. Management must provide a written report on the effectiveness of internal control procedures within 90 days of the publication of the annual report. 4. A public accounting firm may not audit the books of an issuer of public securities if any officer or director of the issuer was employed by the public accounting firm and participated in any audit activity with the issuer within 1 year. A. 1, 2, and 4 only. B. 1, 2, 3, and 4. C. 2 and 4 only. D. 4 only. The answer is B. 1, 2, 3, and 4. All of the listed requirements are provisions of the Sarbanes-Oxley Act. Question 15. The Sarbanes-Oxley Act has multiple sections that outline management's responsibility regarding A. Required education for chief financial officers. B. The purchase of securities. C. Long-term strategic planning. D. Internal controls and external reporting. The answer is D. Internal controls and external reporting. Section 404 of the 2002 Sarbanes-Oxley Act requires management to establish and document internal control procedures and to provide a written assessment within 90 days prior to publication of annual reports of the effectiveness of the internal control structure and procedures. Section 906 of the Act requires management certification of the financial statements. Question 16. Which of the following does not have to be certified by the management of a public company according to the Sarbanes-Oxley Act, SOX? A. Management's responsibility for the internal control system. B. The financial reports have been reviewed by management. C. Management has certified that the auditor has reviewed the internal control system. D. Management has had discussions with the external audit firm and the audit committee with respect to any material internal control weaknesses. The answer is C. Management has certified that the auditor has reviewed the internal control system. This is correct. Management is not responsible for certifying that the auditor has reviewed the internal control system. The external auditor is responsible for this. Question 17. Which of the following are responsibilities of management? 1. Aid in the choice of accounting methods and policies. 2. Document internal control procedures. 3. Sign quarterly and annual financial reports. 4. Choose the auditor and approve auditor compensation. V. Review the auditor's suggestions for improved internal controls. A. 1, 2, 3, and 5 only. B. 1, 3, 4, and 5 only. C. 1, 2, 3, 4, and 5. D. 1 and 4 only. The answer is A. 1, 2, 3, and V only. Management must document internal control procedures and provide a written assessment within 90 days prior to the publication of annual reports on the effectiveness of the internal control structure and procedures. In addition, management must sign quarterly and annual financial reports, and the Chief Executive Officer must sign tax returns. The Audit Committee of the Board of Directors, not management, chooses the auditor and approves auditor compensation. Question 18. Which of the following is not an attribute required by the Sarbanes-Oxley Act for the financial expert who serves on the Board of Directors and the Board's Audit Committee? A. An understanding of internal controls. B. The individual must be a CPA or CFA. C. An understanding of Audit Committee functions. D. The ability to assess the accounting for accruals, estimates, and reserves. The answer is B. The individual must be a CPA or CFA. This is correct. There is no requirement that an individual who is the financial expert is either a CPA or CFA. Question 19. How entities are systematically directed and controlled refers to which of the following? A. Corporate governance. B. Sustainability. C. Agents. D. Internal controls. The answer is A. Corporate governance. This is correct. Corporate governance refers to how entities are systematically directed and controlled, including the oversight and obligations of the Board of Directors, management, and the Audit Committee. Question 20. Is tone at the top and the corporate governance policies of the organization connected in any meaningful way? A. No, tone at the top refers to internal actions, whereas corporate governance policies are focused only on external activities. B. Yes, the tone at the top and corporate governance policies refer to the same set of activities, and merely refer to whether the actions taken are internal or external in nature. C. No, tone at the top is gradually being outsourced by different technology tools, and corporate governance policies are more important in a globalized environment. D. Yes, tone at the top and corporate governance policies are both reflections of how the organization operates, deals with stakeholders, and manages organizational issues. The answer is D. Yes, tone at the top and corporate governance policies are both reflections of how the organization operates, deals with stakeholders, and manages organizational issues. This is an accurate description of how both terms are connected. Question 21. All of the following statements in regard to management's report on internal controls over financial reporting in accordance with the Sarbanes-Oxley Act are true except that the report must A. Include a statement of management's responsibility for establishing effective internal controls over financial reporting. B. Include a statement that the design of the internal controls is the responsibility of the company's audit committee. C. Assess the effectiveness of the company's internal controls over financial reporting, as of the end of the period. D. Be attested to by an independent auditor. The answer is B. Include a statement that the design of the internal controls is the responsibility of the company's audit committee. The design of the internal controls is the responsibility of the company's management, not the company's audit committee. Thus, this statement is not true. Question 22. What should be the goal of internal controls at an organization? A. Internal controls should control, verify, and optimize information within the organization for business decision-making. B. Internal controls should provide management with complete assurance over the accuracy of internal information. C. Internal controls should exclusively verify the financial information generated by the organization. D. Internal controls should form the basis for the work performed by the external auditors during the external audit process. The answer is A. Internal controls should control, verify, and optimize information within the organization for business decision-making. This is an appropriate definition of what internal controls should strive to accomplish within the organization. Question 23. Which of the following best describes the primary benefit or benefits of cross-training for employees and organizations? A. The primary benefit of cross-training is to help employees better understand what their colleagues deal with, so they can engender sympathy to other functions. B. The primary benefit of cross-training is that during times of high employee turnover, the existing employees can cover the duties of the employees who left the organization. C. The primary benefits of cross-training are that it helps spread organizational best practices, and it allows employees to uncover possible mistakes or errors. D. The primary benefit of cross-training employees is that it allows access to all internal information across division lines, which can help unlock innovation. The answer is C. The primary benefits of cross-training are that it helps spread organizational best practices, and it allows employees to uncover possible mistakes or errors. These are two primary benefits for organizations and employees that are associated with cross-training. Question 24. Which one of the following would be most effective in deterring the commission of fraud? A. Hiring ethical employees, employee training, and segregation of duties. B. Policies of strong internal control and punishments for unethical behavior. C. Employee training, segregation of duties, and punishment for unethical behavior. D. Policies of strong internal control, segregation of duties, and requiring employees to take vacations. The answer is D. Policies of strong internal control, segregation of duties, and requiring employees to take vacations. The most effective policy to deter the commission of fraud is to provide policies of strong internal control, segregation of duties, and requiring employees to take vacations. Question 25. What is the connection between the tone at the top and internal controls? A. Since so much of the decision-making process has been automated and/or enhanced by technology, the connection between the philosophy and mindset of senior management is not as connected to internal controls as it has been. B. The tone at the top remains critical for establishing company culture, implementing certain control tools, and maintaining culture in good and bad times. C. The tone at the top really only pertains to financial reporting and information, so the connection to internal controls is rather limited. D. Following recent scandals, tone at the top has been outsourced to external consultants and management professionals, so management accountants can focus more on developing internal controls. The answer is B. The tone at the top remains critical for establishing company culture, implementing certain control tools, and maintaining culture in good and bad times. Tone at the top is important for making decisions, establishing controls, and ensuring the importance of these tools over the medium to long term. Question 26. The overall attitude and awareness of an entity's board of directors concerning the importance of internal control usually is reflected in its A. Computer-based controls. B. Safeguards over access to assets. C. System of segregation of duties. D. Control environment. The answer is D. Control environment. This answer is correct. The control environment is one of the 5 interrelated components of an internal control system. The control environment reflects the overall attitude, awareness, and actions of the owners, board of directors, management, and others concerning the importance of internal control within the entity. Question 27. Which of the following scenarios would possibly represent a management philosophy that could pose a risk to the creation of an ethical control environment? A. A management team focused on generating long-term growth and increases in earnings power for shareholders and stakeholders. B. A management team focused on exceeding short-term financial results so they can pay bonuses to all employees at the firm. C. An organization that was previously cited for unethical behavior and illegal actions, but with a new management team in place to address these items. D. A management team that is focused on risk management and conservative management policies and control activities. The answer is B. A management team focused on exceeding short-term financial results so they can pay bonuses to all employees at the firm. Although paying bonuses to employees may sound good, the emphasis on short-term earnings may create an unethical environment. Question 28. Which of the following scenarios would possibly represent a management philosophy that could pose a risk to the creation of an ethical control environment? A. A management team focused on generating long-term growth and increases in earnings power for shareholders and stakeholders. B. A management team focused on exceeding short-term financial results so they can pay bonuses to all employees at the firm. C. An organization that was previously cited for unethical behavior and illegal actions, but with a new management team in place to address these items. D. A management team that is focused on risk management and conservative management policies and control activities. The answer is B. A management team focused on exceeding short-term financial results so they can pay bonuses to all employees at the firm. Although paying bonuses to employees may sound good, the emphasis on short-term earnings may create an unethical environment. Question 29. Which of the following correctly describes the level of internal controls that an organization should implement to ensure correct valuation and documentation of its physical assets? A. Since physical assets can be easily appraised by an external third party, the organization should not use organizational resources to establish internal controls over the values reported to shareholders. B. Physical assets are depreciated as a matter of course, so the current market valuation of physical assets is of limited importance for users of financial statements. C. Physical assets should be subject to controls and valuation procedures similar to those put in place over other kinds of assets and information. D. The organization should only have controls to ensure that the current year depreciation and accumulated depreciation accounts are correctly stated to comply with external audit requirements. The answer is C. Physical assets should be subject to controls and valuation procedures similar to those put in place over other kinds of assets and information. The tracking and reporting of physical assets is important, so it is important for organizations to establish internal controls over these assets. Question 30. What is the most appropriate definition of internal control structure as it pertains to the internal audit processes? A. Internal control structure pertains to the number of tests and examinations performed during the internal audit review by management. B. Internal control structure is linked to the number and type of internal controls established by management to prevent and uncover possible unethical activity. C. Internal control structure is only linked to the testing and procedures over cash and cash management procedures since those are the most at-risk assets. D. Internal control structure pertains to the technology assets and systems put into place to prevent and uncover potential unethical activity. The answer is B. Internal control structure is linked to the number and type of internal controls established by management to prevent and uncover possible unethical activity. This is the most appropriate definition of internal control structure as it pertains to internal audit processes. Question 31. When an organization is experiencing rapid growth, how important are internal controls? A. Since rapid growth is a good thing for organizations, internal controls can be put on the back burner until growth decelerates. B. Growth and generating value are the main fiduciary duties of management, so internal controls are a secondary issue in high-growth industries and businesses. C. Even in a period of high growth, internal controls and control policies should always come before growth and revenue opportunities. D. Even during periods of high growth, there should be a balance of control and growth opportunities. This can be achieved by internal audit coordinating with other functional groups. The answer is D. Even during periods of high growth, there should be a balance of control and growth opportunities. This can be achieved by internal audit coordinating with other functional groups. This is an appropriate definition of how important internal controls are when an organization is experiencing rapid growth. Question 32. Which of the following is not a requirement regarding a company's system of internal control under the Foreign Corrupt Practices Act of 1977? A. The recorded accountability for assets is compared with the existing assets at reasonable intervals, and appropriate action is taken with respect to any differences. B. Management must annually assess the effectiveness of its system of internal control. C. Transactions are executed in accordance with management's general or specific authorization. D. Transactions are recorded as necessary, 1. To permit preparation of financial statements in conformity with GAAP or any other criteria applicable to such statements, and 2. To maintain accountability for assets. The answer is B. Management must annually assess the effectiveness of its system of internal control. Management's annual assessment of internal control is not a requirement of the Foreign Corrupt Practices Act. It became a requirement with the passage of the 2002 Sarbanes-Oxley Act. Question 33. The Internal Control Integrated Framework from 1992 comprises 5 mutually reinforcing components. An organization's ongoing management activities, evaluations, and internal audits are a part of A. Monitoring. B. Information and communication. C. Control environment. D. Risk assessment. The answer is A. Monitoring. Monitoring is accomplished through ongoing management activities, separate evaluations, or both. Internal auditors, the Audit Committee, and the Disclosure Committee, as well as management, may all be involved in monitoring controls. Question 34. Internal controls are designed to provide reasonable assurance of achieving a corporation's control objectives. Several factors may present inherent limitations to otherwise well-designed policies and procedures. Which one of the following is not a factor that limits the effectiveness of internal controls? A. Management override. B. Segregation of duties. C. Carelessness. D. Collusion. The answer is B. Segregation of duties. Certain human factors or exceptions may present inherent limitations to otherwise well-designed and well-supported control policies and procedures. The major ones are management override of controls and collusion between employees and outsiders. Other inherent weaknesses are carelessness, misunderstandings, and the cost/benefit nature of controls. However, if internal controls are properly observed, segregation of duties is not a limiting factor. Question 35. Which of the following best describes the interrelated components of a system of internal control? A. Organizational structure, management philosophy, and planning. B. Control environment, risk assessment, control activities, information and communication systems, and monitoring. C. Risk assessment, backup facilities, responsibility accounting, and natural laws. D. Personnel practices and policies, authorization, and segregation of duties. The answer is B. Control environment, risk assessment, control activities, information and communication systems, and monitoring. The 5 interrelated components or elements of internal control as defined in the 1992 Committee of Sponsoring Organizations model are the control environment, risk assessment, control activities, information and communication, and monitoring. Question 36. Would instituting a cross-training program between the employees of the human resources and accounting functions make sense from an internal control perspective? A. No, because human resources employees have access to confidential information, and they would not normally be asked to perform accounting duties in other situations. B. Yes, cross-training always generates internal efficiencies and benefits, as employees can uncover pain points and address them from an objective perspective. C. No, because cross-training is not as necessary today due to the increased ability of management to review information on a continuous basis. D. Yes, allowing accounting professionals to see how human resources handles employee compensation information and the payroll process will lead to better ways of entering these items from an accounting perspective. The answer is A. No, because human resources employees have access to confidential information, and they would not normally be asked to perform accounting duties in other situations. A cross-training program between human resources and accounting personnel is an example where cross-training does not make sense from an operational or control perspective. Question 37. Which of the following statements regarding the development and implementation of an internal control system is correct? A. The reliability of the financial statements is assured. B. Information should be identified, captured, and communicated in a timely manner. C. The success with respect to an entity achieving its goals is assured. D. The external auditors will develop the internal control system of a public company. The answer is B. Information should be identified, captured, and communicated in a timely manner. This answer is correct. One result of developing and implementing an internal control system is that information should be identified, captured, and communicated in a timely manner. Question 38. Which of the following provides the best definition of the purpose of internal controls? A. The purpose of internal controls is to ensure that financial statements are presented free from error to external users. B. The purpose of internal controls is to make sure that all technology-related assets and information are safeguarded against hacking and data breaches. C. Internal controls help safeguard organizational assets, protect information, and assist management in making more effective decisions. D. Internal controls are primarily focused on safeguarding information linked to the financial statements. The answer is C. Internal controls help safeguard organizational assets, protect information, and assist management in making more effective decisions. This is an appropriate definition of the purpose of internal controls. Question 39. A public corporation that must meet the provisions of the Foreign Corrupt Practices Act of 1977 should have a compliance program that includes all of the following steps except source, retired ICMA CMA exam questions. A. A cost/benefit analysis of the controls and the risks that are being minimized. B. An authorized and properly signed agreement that it will abide by the Act. C. A system of quality checks to evaluate the internal accounting control system. D. Documentation of the corporation's existing internal accounting control systems. The answer is B. An authorized and properly signed agreement that it will abide by the Act. A compliance program to meet the provisions provided in the Foreign Corrupt Practices Act of 1977 include documentation of the corporation's existing internal accounting control systems, a cost/benefit analysis of the controls and the risks that are being minimized, and a system of quality checks to evaluate the internal accounting control system. Question 40. Companies with international operations must comply with the Foreign Corrupt Practices Act, FCPA. In order to comply with FCPA, a company's internal controls must provide reasonable assurance that A. Management must authorize all access to assets. B. The company's financial records are in accordance with applicable accounting standards. C. Management must authorize all access to assets and that the company's financial records are in accordance with applicable accounting standards. D. Management does not need to authorize all access to assets and the company's financial records are not required to be in accordance with applicable accounting standards. The answer is C. A system of quality checks to evaluate the internal accounting control system. This is correct. Companies with international operations that must comply with the FCPA must have internal controls that provide reasonable assurance that management must authorize all access to assets and that the company's financial records are in accordance with applicable accounting standards. Question 41. How does an ethics hotline help an organization create a good tone at the top and operate in an ethical manner? A. Since employees are not likely to submit reports or information to management, an ethics hotline will not improve the ethics environment at a firm. B. An ethics hotline provides employees a method to report possible unethical activity, and to hold other employees accountable for possible ethics violations. C. If the organization has invested significantly in technology and automation, an ethics hotline is not a requirement in the current digital environment. D. An ethics hotline will address many of the needs of an organization and eliminate the need for some training and education programs. The answer is B. An ethics hotline provides employees a method to report possible unethical activity, and to hold other employees accountable for possible ethics violations. Providing this venue an opportunity for reporting possible violations will help create and improve the ethical environment at the firm. Question 42. The Foreign Corrupt Practices Act, FCPA, of 1977. A. Requires certain records be kept for a minimum amount of time. B. Forbids the bribing of foreign officials. C. Requires companies maintain a reasonable set of internal controls. D. All of the above. The answer is D. All of the above. The FCPA requires certain records to be kept for a minimum amount of time, forbids the bribing of foreign officials, and requires companies to maintain a reasonable set of internal controls. Question 43. Which of the following is an example of a control environment and management philosophy that might create an environment where ethics are subordinated to other needs? A. An organization that is characterized by long-term investing in contracts, physical assets, and R&D activity. B. An organization where management professionals emphasize meeting and exceeding periodic financial goals and objectives above all else. C. An organization that has recently streamlined its operations to improve efficiency, including a reduction in ancillary product and service offerings. D. An organization that has recently launched a new employee development and training program at the same time that it expands into new markets. The answer is B. An organization where management professionals emphasize meeting and exceeding periodic financial goals and objectives above all else. Fulfilling and exceeding periodic earnings estimates is important, but this should not be the overarching priority for all organizational decisions.